Ladies and gentlemen, good day and welcome to Supreme Facility Management Limited H1 FY26 earnings conference call hosted by Kirin Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Samiksha Ramteke from Kirin Advisors Private Limited. Thank you and over to you, ma'am.
Thank you. On behalf of Kirin Advisors, I welcome you all to the conference call of Supreme Facility Management Limited. From management team, we have Mr. Amol Shingate, Executive Director and CEO, Mr. Niklesh Luya, Chief Financial Officer. Now I hand over the call to Mr. Amol sir. Over to you, sir.
Good afternoon, everyone, and thanks for joining this call today. I truly appreciate your time and the continued confidence you place in our company so far. It is always a pleasure to connect with you and it is always a pleasure to connect with our investors as well and share the progress we have made so far. So financial year 26 H1 has been an encouraging period for us where our integrated services model, strong client relationship and the operational discipline have helped us to maintain the steady momentum growth across our business verticals. The positive traction we are seeing reaffirm the strength of our strategy and the growing shift towards the integrated outsourcing. So financial year 26 H1 has been a steady and the encouraging half year for us. We continue to strengthen our integrated services platform across integrated facility management, employee transportation, corporate food solutions, supply chain management, and the production support services. It's a completely a diversified portfolio, and these are the services which we are offering. Our long-standing client relationship, high retention levels, and the increased cross-selling opportunities helped us maintain strong operational traction. We also made good progress in enhancing efficiencies through deeper technology adoption, expanding SAP workflows, digital checklist, automation, and the data-driven processes across our sites. So let me briefly touch upon the financial performance so far. On a consolidated basis, our total income for financial year H1 stood at 231 crore, registering 14% growth over financial year 25 H2. So as compared to H2 financial year 25, it is 14% growth. EBITDA increased to 19.92 crore. It's up 13% H on H. So with the margin at 8.62%. Net profit for the half year improved to 4.43 crore, a strong 41% rise, supported by operating leverage and the better cost efficiencies. And the EPS also increased by 15%, and it is 1.79. On a standalone basis as well, our performance in H1 has been steady and broad-based. Total income increased to 197 crore, reflecting 17% growth over H2 FY25. And the EBITDA for the period stood at 19 crore, making a 13.37% increase. With margins remaining healthy at 9%, net profit improved to 4 crore, a strong 35% rise compared to the previous half year, supported by a better operating leverage and the disciplined cost management. And the EPS is on a standalone basis increased to 1.55. Further understanding the strength and the resilience of our core operations. And operationally, we continue to build on our growth drivers, expanding wallet shares within existing client, strengthening our presence across key Western, Northern, and the Southern markets, and adding new capabilities across manufacturing support and the value-added supply chain management services. Sectoral tailwinds remains the favorable across automotive, engineering, FMCG, IT, ITES, warehousing, and the logistics, and our business pipeline of over 1,200 crore provides strong visibility for the upcoming quarter. Looking ahead, our priority is build on the foundation I have created and strengthen the core drivers that will shape our next phase of growth. We are sharpening our focus on scaling high margin verticals, further improving cost efficiency, and driving operating leverage to support strong profitability. Our planned geographic expansion into emerging demands clusters in the north and south, combined with the healthy visibility from our client pipeline, given us confidence on near-term momentums as well. So we are also depending on the use of technology, data-led processes, and the integrated execution to enhance services reliability and the unlock additional cross-selling opportunities within the large account. So with a clear roadmap for sustainable growth, supported by disciplined capital allocation and a balanced approach towards organic initiatives and the strategic acquisitions, we believe we are well positioned to deliver the consistent momentums in the scale, margin, and long-term value creation. So I want to sincerely thank our investors, clients, and the partners for their ongoing support and belief in our company. Your encouragement really drives us to perform better and the steady focus on the long-term sustainable growth. So we truly appreciate your engagement. With that, we would like to and we would happy to take your questions for us. Anything.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Dhanraj Tolani from Kirin Advisors. Please go ahead.
Hi, sir. I have a couple of questions with me. I'll just start with the first one on the industry part. So I just wanted to IFM continues to be I would say the largest segment of ours. So what new opportunities do we see as a outsourcing penetration increase in India?
Yeah, so there are immense opportunity for the IFM services because in India, whether it is a manufacturing sector or maybe IT, ITS, or maybe the retail sector, basically they want to focus on their core activities. Maybe it is related to the direct businesses. So non-core activities they want to outsource, and this trend has increased drastically so far, and in future also the customers are now more aware and they want to focus on their core activities. So non-core activities responsibility they are outsourcing to us. So and we are like it is our core thing and we are doing it very well in this.
Got it. And how are we positioning the product support services vertical to scale it further, or you can say the contribute it more meaningfully to the top line?
Yeah, so the other verticals the supply chain management and the production support services, there is a exponential growth you can see because with the recent pipeline and our business strategy point of view also, these businesses has a potential, and again this is not something non-core activity, we are getting into the core activities, and we are helping with the efficiency and the productivity-based scenarios. This business vertical definitely grow because we have few pipelines where we are trying to execute those orders. So recently we started with L&T as well. So we will grow in this vertical very well.
And also, our corporate food solutions segment has grown well post-acquisition. So what is what is the vision for expanding this segment? Like, if I could say geographically.
Yeah. So in this food solution vertical, there are two methods. Somewhere we have our own kitchen, wherever client don't allow us to prepare inside their premises. So we have our industrial kitchen in the Pune region from in the near periphery we are serving. But the second model, which we are trying very hard, and we have also entered and got few good contracts into that. So nowadays, a company has their in-house kitchen. So we don't have to invest or set up a kitchen for them. So they have their in-house kitchen. So those opportunities we are trying to tap, and wherever means we can expand that into the various regions in India. So our focus basically first for this food solution is the west zone, because that way revenue is hardly 1.5 crore and all monthly. But we will expand that in the west zone first, and then we'll go to north and south.
Also, I just wanted to know, like synergy benefits you are observing from the integrated food services, transport, and production support acquisition.
Yeah. So it's like a cross-selling we always do. And if you see our portfolio, maybe multiple clients has that services. So one client has the facility management as well as transportation and the catering services. So we are selling to our internal customers also. It will give you a good traction in the revenue and the profitability, and the overhead cost will remain intact because of this.
And also, I could see like more than 50%, I would say, is contributing to the revenue. Like 10 customers are contributing to more than 50% of our revenue. So how do we mitigate our concentration risk?
So if you see that in our business, suppose for example, one company, limited company or the private limited company, they have one group, but they have their plants across pan India. So one customer has the multiple locations. So it is a location specific services which we are offering. Like Tata Motors pan India, we are serving them. Volkswagen also pan India, we are serving them. Yes, these clients are contributing, top 10 clients are contributing 50%. But apart from that also, we have a clientele of almost 140 clients, like 50% contribution is from those clients. And there also we are focusing how we can get to the other business services.
And also, okay, are we targeting any other sectors? Like we currently have good tailored solutions, like for sectors like manufacturing or healthcare, and also we have a good retention rate, client retention rate. Are we targeting any new sectors and new clients, something like that?
I mean, definitely new client too we will go for, but not the new vertical. But currently the sectors which have manufacturing, we have a strong presence. IT, ITS, we are going to expand. Apart from that, we have started in the pharmaceutical sector. So there is a very good opportunity, and we have the expertise to deliver as well.
Okay. Got it. Okay. Thank you, sir. That's all.
Thank you.
Thank you. Before we take the next question, a reminder to all, you may press star and 1 to ask a question. The next question is from the line of Amit Bhatt from MIT Engineers. Please go ahead.
Am I audible?
Yes.
Yeah. Hello.
Yes, you are audible.
Amit, you are audible. We can hear you. Please go ahead with your question.
The question is regarding our profit margin, because most of the other players in the this particular field, they are having the profit margin of 3 to 4% range, and we are having the profit margin in 1.9 to 2%, and that's why our stock is not even after the 20-25% top line growth, our stock is not getting that traction from the market. So why we are stuck at this 2% PAT margin?
Nikhil, do you want to take this question or should I answer?
Yeah. So, Amit, if you see, when we compare with the competitors, you have to compare it's apple to apple. So we see there is a lot of facilities which are doing a business which have a facility management and other verticals also. So if we compare the facility management business, the margins are thin in the facility business, and if we compare with the competitors, the margins comes to around 2 to 2.5% only. And mainly in the facility business, the margins are at lower side because our business 100% comes from corporate clients. And considering the competitions and the overheads, the margins are at lower side, that is 2%. If we compare with the competitors, also they have a margin on similar lines.
But is there any difference between the soft services and hard services in integrated facility management? I am talking about the profit margin.
Yeah.
Because, Tell me, please.
Yeah. So in IFM, there is two types of service. One is soft service and one is hard services. So margins in hard services are higher compared to soft services. Soft services margins are lower.
So our product mix we are more towards the soft services compared to hard services.
Yeah.
So can we change that? Because if your company is not going to reach 3% margin, because it's a 50% jump, total jump in your valuation. Only then, our stock and, the investor will get benefited. So my request to the management that please, because you are now having a good economic of scale and, very reputed name, having a very good clients. So please, do something in a hard services area and at least increase, your profit margin. That's the request from them.
Yeah, our plan is that only, and we have already initiated that step, and we have also converted few clients from soft services to hard services. So definitely there is going to be the improvement in the margin as we have seen for this year as well.
Okay. And another question is that you, I think, acquired one company from the south. So can you tell me what basically that company is contributing?
So no, Amit, we have just signed a MOU with them for acquisition. Acquisition has not been closed.
Okay. So we are going to our growth 25%. The company is guiding. In the coming year, we are targeting 25% top line growth and improvement, good improvement in the bottom line also. So this growth, the top line growth, we will achieve organically, or we will acquire some companies from down south and penetrate that part also? What's the strategy?
So we have given a guidelines of 25% CAGR. So it's includes both organically and inorganically.
Okay. Thanks a lot.
Thank you. A reminder to all, you may press star and 1 to ask a question. The next question is from the line of Priya Jain from Greens Capital. Please go ahead.
Hello, am I audible?
Yes.
Yeah, sir, I am new to the company and I was going through your investor presentation. I pressed it as well, whichever is available on Excel. So your receivable have increased to, like in H1 FY26 to around 115, I guess. So, despite the top line growth, how is the company addressing rising receivables and what steps are being taken to solving the gap conversation side?
So if you see, madam, the receivable days it comes around 90 to 95 days, even in FY25 and current also. So the receivables are coming into the 3 months, that is a cycle. Because we are dealing with all the MNC's clients, and majority of MNC clients, the payment terms are like 60 days to 75 days after acceptance of their invoices. So generally invoices happens when we provide the service from 1st to 30. After 30, the invoices happens, and from that day we get the payment in 60 to 70 days. So generally the cycles of receivable will be lying in the similar range of 85 to 90 days.
Okay. And also the, employee costs have, risen sharply in H1 FY26, and I think that is impacting your margin stability. So what is driving this increase, and how does management plan to, protect EBITDA margins going forward? Because you are doing a very good revenue at a very nice top line, but we cannot see that in EBITDA and net profit.
Hello, sorry, I not got your question. Can you repeat?
Yes. So my question is, employee costs have risen sharply to 145 crores, I guess, in H1.
Yeah.
What is driving this increase, and how does management plan to protect EBITDA margins going forward? Like, you have a very good top line, but we cannot see that on EBITDA and net profit. So when can an investor, we as an investor, can expect a good EBITDA margin and good PAT margin?
So, madam, we are looking for a short-term 100 basic point improvements in our EBITDA margins. The manpower cost is directly related to our business, because we are like in IFM business, which is mainly the manpower-oriented business. So when the revenues increase, the manpower cost proportionately will get increased. So it will rise into the similar percent of 62 to 63% of the total revenues.
Mm-hmm.
And in the long term, whenever the size of the business get increased, the operational efficiencies and the average cost get reduced, that will lead to the improvement in the EBITDA margins. Also, when we see the business mix, the IFM have a lower EBITDA margin than the production support service and the other verticals. So when the business mix, other segments get improved, revenues get increased, that will also push the EBITDA margins. So the EBITDA margins which currently we have, that is in the range of 9%, that will definitely be there, and we will improve by 100 basis points in the short terms.
Okay. I look forward to this. Also, regarding employee transportation service, so currently, you own around 445 buses, which makes the business segment asset heavy. Given the high debt level and rising borrowings, which is around 73 crores on current, so how does the company plan to balance growth with this leverage?
So the employee transport segment, the business which we have, so in that we have a two different model. So whenever there is a contract which have a 5 years duration and exclusivity with the clients, then only we invest in the vehicles, and that will be have a back-to-back locking agreement for 5 years. Whenever there is a shorter agreement of 1 or 3 years, we also subcontract. So in employee transportation business, where we invested the vehicles, where we have a fixed contract period of 5 years, in 5 years, the vehicles got free, entire date will got paid off. And after that, if we, when the vehicle turns, it gives us the good margins. So there the IR works out good in the employee transportation business.
Okay. Also, any guidance for, you are doing around a good top line, so where we can see Supreme Facility in next 5 years?
So we have already given a guidelines. If you see the investor in the next 3 to 4 years, we are looking for double the size of the current business. So with a 25% CAGR year on year.
Okay. Any for acquisition or a JV in pipeline?
Acquisitions, yeah, we have signed a one MOU which are under discussions, and also we are looking for discussing with more. So whenever that will be mobilized, we'll communicate accordingly.
Okay, so that is from my side. I look forward to interact with you in next call. Thank you.
Yeah, thank you. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and one. The next question is from the line of Vinod Shah from VS Ventures. Please go ahead.
Hello. Good afternoon, sir.
Hi, good afternoon.
Yes, sir. So I have like a question on some questions on tech side. So like future investment in AI and analytics, like what enhancement are you expecting in operational efficiency?
Yes, on the digital framework, so like I just have mentioned that we to enhance the efficiency through the deeper technology adoption and expanding SAP workflows, digital checklist, automation, and the data-driven processes. So we already have introduced few technology platform where the efficiency and the productivity gets measured and monitored that we are promoting to our clients across pan India. So here the why we are doing it like so instead of the conventional pattern and the method which this industry used to follow, that is going to be the eliminate manual checklist and all, and it is going to be the digitized. So the company per se, they will be able to track and monitor the efficiency and the productivity of people. So accordingly, instead of just a manpower, it is going to be the SLA-based contracts. So technology will definitely help to value add over here. So we have the PASO technology, which we have opted so far.
Okay, great, sir. And sir, we have like a strong presence in the Western market. So, and we are also expanding in North and South. So, like, what trends are we seeing in that market?
Yeah, so if you see that in South region, so almost all the manufacturing industry is located in Chennai region. So Tamil Nadu, Karnataka, there we are focusing a lot of industry bases over there. And in the North region, the Delhi NCR, there we are focusing, and we have our business development team who is working for the business opportunities there. So we have got few contracts in South and North as well, and we started over there.
So, like, can we expect like more large contracts from this new region?
Yes, definitely. Very soon we will. You'll get to know from South. We are doing very well over there, so there we'll get a good revenue size.
Okay, and like what proportion of future growth can we expect from this new region?
So overall growth, as we mentioned, that 25% CAGR you'll see year on year.
No, I was talking about the new regions. Like
new region so new regions as if you see that minimum 30% growth will come from the new region.
Okay, great, sir. Thank you, sir. That's all.
Yes. Thank you.
Thank you. Participants, to ask a question, please press star and one. The next question is from the line of Mahesh Seth from VY Capital. Please go ahead.
Yeah, hello. Can you hear me?
Yes. Good.
Yeah. So, good afternoon. So I had a couple of questions. Like, I want to know, in your SCM vertical, value-added services like packaging, knitting, and assembly are gaining demand. So how are you planning to capitalize on this?
So in this SCM vertical, we are taking the end-to-end responsibility of warehouse management. Like it caters the loading, unloading, inbound, outbound, picking, packing, stacking, racking, inventory management, all type of activities are involved into it, and we are taking the end-to-end responsibility, and all these services we are doing it.
Okay, so warehouse management.
Yes.
And like I also check that we have an impressive 85% client retention rate. So like can I know like what initiatives are helping you to deepen the relationship and increase the wallet share with the client?
Yeah, basically, to maintain the relationship, the quality of services and the expectation, understanding the expectations from client and delivering those on time matters a lot. So far we have managed to, gain the confidence and trust of our clients. So that is the only reason we are able to maintain our clients. And almost since last 4 decades, there are few clients they are still with us. And the average retention, if you say like the year, so 25 years we are like getting giving our services and the contracts are getting renewed.
Okay. Oh, got it. Like, how do you also see cross-selling contributing to margin enhancement and revenue mix over the next like 1 or 2 years?
So margin enhancement for the cross-selling, it's like definitely it will add, the margin will remain the same for the services we are offering, but revenue definitely it will help on the top line.
Okay. Okay, got it. And like as we see, like a cross-selling is a major strength in like our fixed model. So like, can I know some examples of clients where like multiple services lines have been successfully deployed?
Yes. So for Tata Motors, we are giving the pan-India services for IFM and the employee transportation as well. Similarly, for Volkswagen, facility management and the employee transportation services. These are the top clients, and then there are many clients whom we are providing the services, employee transportation and IFM as well as food solution. JCB also comes into it, and the Thermax. These are the few clients.
Mm. Okay. Okay. Got it. Thank you for answering. That's it from my side.
Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and one. The next question is from the line of Chandresh Singh, an individual investor. Please go ahead.
Hello. Yeah. Thank you for the opportunity. Sir, so my question is, what is your long-term vision for transforming the company into, full spectrum integrated business service platform?
So far, like we are transitioning from the service provider to the solution provider. What does it mean for us is like we are not wanting to just provide the services which are very conventional in nature. So the adoption of the technology and integrating all the services, like every company has their premises, plant, and the office buildings. They want the consolidated services. So the services, the mix of services which we have, the diversification we call it as, but it is like a services where every company requires, like facility management, they want somebody to maintain their facility, employee transportation, they want their employee to commute in a safer environment zone and from the transportation services as well. And the food solution also they required, to give the better services to their employees. So these are the services which we are offering where every industry and the sector requires these services.
Okay. Okay. And as outsourcing penetration increases, how do you see our role evolving in the organized facility management landscape?
Yeah. So as I just mentioned, so every company want to focus on their core activities and non-core activities they want to outsource. So these things we will definitely capitalize and, wanting to give the proper services to our client wherever, and we are also promoting in a similar way. Like we are also spreading the awareness, asking company to more focus on their core activities, and non-core activities they can outsource to us, and we take the end-to-end responsibility. It's not that only providing the manpower or only providing a small part of services. So we are integrating and providing the solution to our clients.
Okay, okay. And sir, if you could just elaborate on our unique strengths, which would help us position us become a leading integrated player in the next 3 to 5 years, it would be helpful.
Yeah. Sure. So this industry has challenges also. No? So manpower is like a main key thing, skilled manpower. It is not only the manpower, it is a skilled manpower. So we have also set up a training division from where we are training people and placing them to our clients to give the quality of services. And the sourcing of manpower is also a key part to this business. So from across Pan India, wherever the manpower is available, so from there we have a good network and sources, and whosoever is having the skilled manpower, trained manpower, the now industry is requiring those type of services. It is not that people go and then after that they train at the site location. We are training them and then placing them. So this is adding a value to our customers as well.
Okay,
So
okay.
this is the one thing, like it's like adding a value, and we are also gaining the confidence of customers.
Okay. Okay, thank you for answering all my questions, sir. I'll join back with you if I have any more. Thank you.
Yeah, thank you.
Thank you. A reminder to all, if you wish to ask a question, you may press star and 1. The next question is from the line of Sakshi Shinde from Shah Consultancy. Please go ahead.
Hello. Yeah, sir. My question is, the company is targeting 100 BPS improvement in EBITDA margin, and what special initiatives will support this target?
So the improvement in margins will be supported by the 2-3 main bullets. So one will be the increase in the size of the business, where we get the better leverage of overhead cost. The second will be change of the business mix, because in when we look out the segment wise, vertical wise the services, the others, the ETS and production support services have a better EBITDA margin than the IFM. So whenever there's contribution in total sales get increased, that will contribute into the IFM, the improvement in the EBITDA margins. And third will be the operating leverages. So operation efficiency will also contribute to the improvement in EBITDA margins.
Okay. Okay. And next question is, as scale increases, how do you expect operating leverages to contribute to the margin expansion?
So as I explained, all these three factors altogether will make the minimum 100 basis point, at least 100 basis point improvement in the EBITDA margins.
Okay.
So these all 3-4 factors will contribute into that.
Okay. And my last question is, which service lines currently offer the highest margin expansion potential?
So if you see, the mainly IFM business have a major revenue side, that is the top line, which contribute almost 60% of the business. And if we see the margin wise, it's employee transportation contributes better.
Okay.
That highest contributor.
Okay, sir. Thank you so much.
Thank you. To ask the question, please press star and 1. The next question is from the line of Ishita Sen from Urban Sphere Consultant. Please go ahead.
Thank you for this opportunity. So my first question is,
How are you balancing organic investments with selective inorganic opportunities? Hello?
Yeah. Hello?
Hello?
Yes. Yeah, madam, you are audible.
How are you balancing organic investments with selective inorganic opportunities?
So the main expansion or improvements in business comes from organic. In that, we are targeting the inorganic at a selective basis on the specific geographical expansion. So like in inorganic acquisitions, we are looking up for a target segment as a south where we can expand a business. So inorganic will be very selective based on the geographical expansion or similar segment of business.
Okay. So, as you scale towards rupees 800 to rupees 1,000 crores revenue in the medium term, what balance sheet structure do you envision?
Sorry, what?
Like, as you scale towards 800 to 1,000 crores revenue in the medium term, what balance
Yeah.
sheet structure do you envision?
So, when we close that business of 800 to 1,000 crores, the margins will improve and the debt levels will remain the same levels what we have currently.
Okay, sir. Thank you, sir. That's all from my side. Thank you for
Okay.
answering my questions. Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and one. The next question is from the line of Vinod Shah from VS Ventures. Please go ahead.
Hello again, sir. So how much of our current order book consists of like multi-year contracts?
So, yeah, so in this, in IFM business, if you see, the mainly contract is signed for 1 year to 3 years, but it keeps renewing every year as a perpetuity. It's a long-term contract. But the basically contract duration we signed is 1 to 3 years. In employee transportation, the contract is 3 years to 6 years, which renews after every 6 years, 5 years. That's the duration.
And like if the contracts are more long term, so do we have like more margins over there? Or
Yeah. So yeah. So if we have a contract constant for long terms, we definitely margin get year-on-year improvements.
Okay. And do you see like clients shifting towards comprehensive integrated contracts, like instead of like one standalone service?
Yeah, that was the trend. Like when currently the market are shifting to single service provider for all these services. So if you see the portfolio of services which we have, that is all related to the admin services and support services. And clients are now looking for a single vendor's windows to supply all the services. So that trends are happening.
Yeah. Okay. Okay. Thank you. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and one. As there are no questions from the participant, I now hand the conference over to Ms. Samiksha Ramteke for closing remarks. Thank you, and over to you, ma'am.
Thank you for joining the conference call of Supreme Facility Management Limited. If you have any queries, you can write to us at kirinadvisors.com. Once again, thank you for joining the conference call. Thank you.
Thank you, ma'am. On behalf of Kirin Advisors Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you.